Hello, everybody, and welcome to another Southern California housing market update. My name is Stephen Mead. I'm the principal broker here at Domicile Real estate for people who love houses. Let's jump right into it. I know last week was a bit of an odd week. It was a holiday week. And whenever we run our stats, there are kind of some interesting effects that tend to happen on holiday weeks. This week was not a holiday week, and I think that will allow us to get kind of a better look at what's happening. And, the kind of theme of this is that I think the question on everyone's mind is we are wondering whether you're a buyer or a seller, what you are wondering is, have we reached that point of inflection where because of price increases and some increases in interest rates, have we reached that point where demand, especially in our entry level price range, where that demand is going to start sort of leveling and maybe even tapering a little bit? Have we reached that sort of breaking point of the market where it simply says enough is enough, and this is as high as kind of we can go? And I'm not sure we've quite reached that breaking point exactly, but I think there's some signs, that this isn't a full speed ahead on prices just going up indefinitely. And we're definitely seeing some signs of that. And we're also seeing a little bit of a yo-yo like effect in some of our market metrics. And usually when we start to see that, everybody thinks that these curves have this beautiful look like this, where they round and they crest and they go like this. And that's not really how it works at all. In fact, it's kind of a jagged edge where you start to notice that you have hot weeks and not as hot weeks, and you start to see more of that, right? As you start to see a market that's kind of hitting a little bit of that inflection point. And before we continue, because I know some people are going to write in the comments, inflection point does not mean I think that we are cresting on some sort of market peak. I don't really think that's what I'm talking about. I think we're just seeing a sign where we may not see things going up at sort of these double-digit level rates for a huge while longer. At least there might be a little bit of a temporary halt to that. Of course, inflation is the other thing. If inflation and wages go up, who knows where home prices can go if that starts to happen too. But I guess my point here is we're seeing some signs that maybe this market is not infallible in terms of we're not going to see 10% annual gains forever. So let's jump right in, and I'll kind of go over what I'm seeing and what I think is happening here in the market. So, all right, number one, total active listings, right? And we start with this because inventory is what is on everybody's mind. Whenever we talk to buyers, whenever we run comps, everything is about low inventory, low inventory, low inventory. And if you look here, we've got pretty flat inventory as far as our $1 to $2 million price range goes. But look what's happening here. We're seeing a little bit more activity. This is actually a relative high point. I think we are at the highest point we have been since the end of January in terms of our under $1 million active listings. I think if you're a home buyer, this is really a good thing. If you're a home seller, take note of this. I think if you sort of have the attitude that you don't really need buyers, there will always be another buyer. I think, maybe you might want to check that attitude a little bit. You still want to put the work in. You still want your home to be the best that it can be. But understand, if this trend continues, we may get back to a point where we see what, ultimately was still very low inventory, right? The beginning of the year, but that would be a high point for 2021. So definitely a little bit of a sign of increasing inventory there in our marketplace. So moving on, this is our new listings. And one of the things that we talked about was just really seeing this number come off of a cliff the past, in that last holiday week, right? I mean, we were seeing some nice gains in sellers finally putting their homes back in the market. And if you look at what happened here, we actually have seen a return to that. And while it's not quite as steep of a slope as we saw over here, this is definitely an increase, right? Like this is sort of like a picking up where we left off kind of a number. Things dropped, but then they came back. And they're probably back to around that sort of early March level. Still not the levels that we've been talking about. I think the number one factor in that is we have a lot of sellers who are saying, if I sell, where am I going to go? And they don't have a lot of confidence about finding their next property. We have a number of clients in that exact category. And my advice is definitely give us a call. We've had good luck in getting all of our sellers who are looking to make a change into another property and under contract. So we are seeing a little bit of a resumption of those new listings coming onto the market. Now, if we look at our new escrows, we see kind of the same thing, right? Going right back to this sort of early March kind of a level. But I'm going to show you the absorption rate and kind of the devil's in the details on this. Again, we have a flat 1 to 2 million. Of course, just as a reminder for everyone, this is Los Angeles and Orange counties. The one thing I wanted to sort of mention here is, that absorption rate is very important because that really does tell you what our sort of relative supply and demand is. It's never one or the other, can't tell the whole story. We need to know both of those numbers and how they interact. And if we look here at our absorption rate, this is really telling the story in that under $1 million category. And if you look here, even in our 1 to 2, you'll see a very gentle downslope. Now, I've been excited a bunch of times before saying, hey, the market's going to get a bit easier. And then the next week, things sort of bounce right back. We were at about this point of absorption rate back in the beginning of March. But I mean, this is a pretty big week to week drop to kind of go and see this absorption rate drop to, still in the 80s. This is still a very, very competitive market. It's just not the hyper competitive market that we have seen at points in the past in 2021. So, this is probably one of our strongest declines since in that absorption rate week over week since maybe right around here, the end of January, beginning of February. So, this kind of shows you that this market isn't 100% infallible. It can't, we're not going to see these numbers jump back into the 90s forever. Still very competitive, but slightly easier in this past week. So if you're a buyer out there, this is the week where maybe you don't have to accept every term on the counteroffer to get the property. Now we have our closed prices. And again, you really need to remember that these are based on data from 4 to 6 weeks ago. These are the contracts that were negotiated 4 to 6 weeks ago. And what do we see? A flattening in both our median and our 75th percentile, and a little bit of growth here down in our entry level market. What does that tell me? That our entry level is still somewhat supply constrained. But if you look, there's a lot of fits and starts to these numbers. What this means is, this is a market that does not move linearly. I've talked about that before. It kind of moves in fits and starts. What I'm hoping to see is that this is going to be a slowing of this rise, right? Like maybe this will be a gentler inflationary level increase in closed prices going forward through the end of the year. Not quite enough data to really sort of make that prediction yet. Now we have our percent active after 14 days in the market. And this is another sort of indicator of level of competition in the marketplace. And what I mean by that is if you are a buyer in the marketplace, this kind of says maybe part of your offering strategy or your strategy when in a multiple counteroffer situation. If you are a seller, this also affects your strategy. This means that sort of taking this attitude of it doesn't matter, you'll take what we give you. If you're in this under $1 million price range, admittedly, if you have 20 offers on a property, you could probably still do that. But there are some sellers that are going to find, I think when I see activity like this, it makes me think that there are going to be sellers who, pardon the term here, overcook the goose, thinking they kind of have a better hand than they really do. And, looking at this, we've seen our 1 to 2 million in this have a gentle decline. But boy, look at this under 1 million category. What this means is that a higher percentage of homes that came on the market in the last 14 days are still on the market. Now, because this is 14 days, it means we still have a little bit of that holiday week sort of in these numbers. But, I think this is sort of a real indicator to me. I think that under 1 million market has gotten, relatively speaking, less competitive in the last week than it was, say, 2 weeks ago. Now, if we look at our list to close ratio, again, I want to remind everybody, this is based on contracts that were signed 4 to 6 weeks ago. So, I mean, we have here over 103%. That means that on average, homes are going for 103% of list price. I actually think that this number will temper a little bit in the next coming weeks. So, I could be totally wrong about this, but I think as we see kind of some more of the data, we're going to see this kind of round over and maybe stick somewhere in this 100 to 102% range, which frankly is where we were a large portion following the new year, right? As those closings happened, we were in that range of being in that low hundreds, not this 103, 102 type number. We have our days on market for new contracts. We're holding pretty steady in our under 1 million category, right around 20 days. I think the good news here is that it's not going lower. It actually moved down 1 day, but I don't really count that as moving a huge amount. But if you look at this graph, right, since towards the end of 2020, I mean, we've just seen this number march lower. And I think what we're really seeing here is a stabilization of this number. And it looks like our 1 to 2 million had a little bit of a bounce. We'll see if that continues more than 1 week. I think it's very hard to make trends out from a week to week movements. Again, there's sort of a lot of jitter in the signal, if you will. There's a lot of sort of like movement. But when I see this kind of yo-yoing effect, that tells me that we are sort of nearing a point of inflection and that we're going to have a little bit more stability in our numbers going forward. We're not going to see drastic drops in days on market. We're not going to see drastic increases in price. And with a little bit of luck, we're going to see a little bit more inventory too. Finally, we have our affordability chart. And, this one is really a favorite of mine. I know some of you have said and sent me messages saying that you're not quite sure you understand it. So again, I'm going to go over it again. What we do is we basically take a look in June of 2018 and we look at the median priced home and we use that as like that. Think of that as like 0.0, right? That is zero on our graph, or 100%. And then if we see those payments go lower, that would indicate, like here in 2019, we were in the low 90s. And you see these payments just kind of slowly kind of moving up and getting higher. And we saw things kind of break a little bit and take a pretty decent drop. I really want to see if this continues, where we settle in somewhere in this kind of 110% level. I think if you look here right now, we're at about 115%, meaning in absolute dollars, if that payment was $1,000 a month in 2018 in June, the payment today would be $1,150 approximately as of today. But remember, there has been some inflation. I actually think there's definitely been quite a bit more inflation than people want to let on in the past couple of months. So, the reality is, what's the real number, right? If we adjust for inflation, what is the real number of housing versus 2018? I actually think it's only gone up a little bit. That leads me to believe that these numbers can still go higher. I just think the rate of these numbers going higher might slow down a little bit. Hopefully, it'll slow down a little bit. As an aside, I'm going to mention this. I think that a lot of people are under the impression that those of us who work in the real estate field love crazy markets. And I'm going to actually tell you that's not true. I like steady markets that have supply and demand fairly close in equilibrium. I think that those are very healthy markets. Those are very sustainable markets. I think those are markets where it's very easy for buyers and sellers alike to be confident in the decisions that they make. These kind of markets like we have right now that are a little unpredictable, they're a little crazy. And I think sometimes it's hard for buyers and sellers to make great decisions. They usually don't have a lot of time to make decisions, and they tend to second guess because we don't have a real complete picture of the data because things are changing so quickly. We don't have a lot of confidence that this week is exactly the same as last week. And in fact, in this case, it's not the same as last week, right? This week is a bit different than last week's numbers. Anyhow, that's kind of all we have for this week. I feel like a broken record when I say we really want to stay tuned next week to see if we've got a trend going, if we have a week to week. I do think things feel a little bit different to me. It still feels like a very, very active seller's market. It just doesn't feel like quite as much of a circus as maybe it's felt in the last couple of months. And I think that's a good thing. I think that gets us closer back to that equality between supply and demand. We're still nowhere near that, by the way, but a little bit of a step closer. I think that is healthy for buyers in this market, and ultimately, I actually think it's healthy for sellers too, especially those sellers who are a seller today but might be a buyer tomorrow. Anyhow, don't forget to like, subscribe, click that notification bell. We also have some other cool videos on our channel on YouTube. So if you're not on there, our YouTube channel is Domicile Real Estate. Just search for it. We don't have a custom link just yet, but you definitely might want to take a look at that. Let's see what else. Questions, comments, we love them. If you'd love to work with us, if you're looking to buy or sell in Orange or Los Angeles counties, we are definitely here for you. If you're outside of those areas, we can also make recommendations of great agents who think like us. And yeah, we will see you this Friday for our first time home buyer specific market update.